Hey guys, welcome back to Finastic Trading. So in this video, you will learn how you can make money with trading forex markets in 2024. So this video will be enough for you if you are getting started into forex trading. Okay, so without wasting any time, let's get started. In this video, I will show you the content first. So let's begin. First, the timeline of this masterclass will be: first, we will know the basics of trading, like overview of financial markets. I will explain the different asset classes like stocks, bonds, forex, commodities, etc., and the introduction to the market participants like traders, investors, institutions. In the second module, we will learn about the fundamentals of technical analysis. Okay, so I'll explain you what technical analysis is, how you can use candlestick pattern and you can read chart through it, what are support and resistance levels, introduction to popular technical indicators like moving average and RSI. Then in module 3 you will learn introduction to fundamental analysis, like definition and importance of fundamental analysis, key economic indicators and their impact on markets. Okay, and in the fourth module we'll learn about risk management, like how you exactly you can manage your risk and become a profitable trader. So in risk management we will learn importance of risk management in trading, setting stop loss and take profit levels, position sizing and leverage. So you can customize it through your trading capital or your trading psychology. I'll just give a game plan for you. You can customize it according to yourself. And in the fifth module, we will learn about developing a trading plan. How exactly you can develop your own trading plan through which you can trade and make good profits and become a profitable trader. So we will discuss about creating a personal trading plan, setting goals and objectives, time frame and trading style. In the next module, we will learn about the trading psychology, the role of psychology in trading, common psychological challenges and how to overcome them, maintaining discipline and emotional control. In the next module, I'll show you some live trading examples from the modules which I have taught you earlier. From them, I will show you live examples how to draw support, resistance, and candlesticks pattern and identify them on the real charts and how you can trade based on them. Okay, and lastly, we will look for the trading platform and tools. What trading platforms you will use in the to begin your trading journey and what are the essential tools and resources you will need. So let's get started without wasting any time. We'll begin our module with understanding of basics of trading. So if you like the content of this video, make sure you subscribe that channel and like this video, so it will motivate us to make more videos for you all. So let's begin with understanding the basics of trading. Firstly, we will learn about major financial markets. Okay, stock market. So in the stock market, basically you can buy a ownership in the company. Suppose you want to buy share in the Apple company. So currently Apple is priced at around 180 to $185. So if you want to buy a share in Apple, you have to pay $185. And in the future, if Apple grows, your share price will also grow from 185 to 190 or 200 or 210. So in that way you will gain in the share price for the amount you have invested. Okay, so secondly we have bond markets. So basically bond markets is debts or securities issued by governments or corporation. So bond markets, you can invest in debts or securities, or like we have 10-year government yields, so you can invest in that. Okay, so bond market is basically for investing. So the third market is forex market. So in forex market you can trade or invest between the conversion rates of the currencies. Okay, I'll show you on the live chart how it looks. And fourth is the commodity market, like you can invest or trade in physical goods like gold, oil or agriculture. Okay, so let's move on to the next part. So the major again in the major financial markets, are the type of participants involved. First, we have retail traders like us who trade or invest in the markets, individuals trader like you and me. Secondly, we have institutional investors, large organizations like mutual funds, hedge funds, and pension funds, or you can say like brokers also. You can say institutional investors. Fourth, market makers like entities that facilitate trading by providing liquidity. That means brokers. They provide liquidity in the market by connecting you and me who are trading in the markets. Okay. And the fourth is central banks. They influence the monetary policy and impact on the currency markets. They also are the participant in the market. They also invest or trade in the markets. So now let's us move on to the market dynamics, and in this you will learn about supply and demand. So basically concept of supply and demand is, if you are trading in any market, like previous I've told you before, like there are any type of market, stock market, currency market, bond market, or commodity market. In all the markets, you have to focus on the supply and demand zones. Okay. So let's just understand in this way. If the supply of product increases, the price of product decreases. So let's take the example of gold. If the supply of product will be more, suppose supply of gold is more in the market, so automatically the price of product will be lower. Okay. And if the demand of product is higher, like gold, the demand of product is higher, then the price will also be higher of that product. Okay. So prices are determined based on the interaction between buyers and sellers. For every transaction, there must be a buyer and a seller. So in trading, if you know, if you want to sell something, there must be a buyer. Then only your trade will be executed. And if you want to buy something at a level or at a price, there must be a seller at that price, and the broker connects you to, he acts as a middleman and provides liquidity. So in order to buy or sell, there must be a buyer in a opposite of a seller. Okay. So let's move on to the next topic. So fundamentals of technical analysis. We move on to our second module. So technical analysis and its purpose in trading. Technical analysis involves studying historical price data and chart patterns to predict the future and price movements. Okay, so technical analysis is basically done on candlesticks patterns, or the previous historic movements price has made in the past. You can see on the left side of the chart. So let's move on to the chart and see how it looks. So I came to the chart, and as you can see here, you can see an USD CAD pair on which you can see these candlesticks. Okay, these are called candlesticks, which we will learn further in the video. So we predict by seeing the supply and demand zones and the previous historic price movements, we predict where price will go, and we trade according to that. Okay, so it's a very simple concept. And I've told you about forex trading. So let's understand first what is a forex trading. So in forex trading, as you can see my watch list. Here you can see Euro JPY, GBP JPY, Euro USD. Okay. So let's just take example of USD CAD, as you can see on the chart. So in USD CAD, if I show you, let me mark. So in USD CAD, the first and the second. So in any currency pair, you can see there are two currencies. Okay, first half and second half. So in this case, you have firstly US dollar and Canadian dollar. So in any currency pair, you will see two currencies which are derived from each other. Okay, so the first currency here, it is US dollar, and the second currency is Canadian dollar. Okay, so USD CAD, it is a pair based of two currencies. Okay, so in any currency pair, it's all total called a currency pair. Okay, so in any currency pair, the value of first currency pair USD dollar, in this case USD dollar, will be 1. Okay, in any currency pair, the value of first currency will be 1. It is also known as base currency. Okay, and the value of Canadian dollar, the second currency, it is known as the quote currency. You can see the value of Canadian dollar 1.34362 is the value of CAD, Canadian dollar, on behalf of US dollar. Okay, so US dollars value is 1, and on behalf of that Canadian dollars value is 1.34362. Okay, so in order to buy 1 US dollar, you have to pay 1.34364 Canadian dollars. That's how it is derived, and that difference, the difference in both the currencies, we trade on that and make money. Okay, so let's us move on to the next topic. So candlesticks pattern and chart trading we will understand. So as you can see here, it is a diagram of an candlesticks which I've just shown you in the charts. Okay, so in the candlesticks you can see a green candlesticks and a red candlesticks. Okay, so green candlestick means the price is going up and a red means going down. Simple terms. Okay, we also call green candle as bullish candle and red candle as bearish candle. Okay, so in the green candle, the bottom part of the green candle, you can see the square part is known as the body of the candle, and upside and downside you can see the stick like structure. It is known as the wicks. Okay, so in a candlestick you can see a body and a wick. Okay, so candlesticks is made of two things, a body and a wick. So the lower part of the body is known as open. So price opened at this point. Okay, and price closed at this point. Okay, so this body of the candle shows the opening and closing of the candle. Okay, so price opened at this point and closed at this point. Okay, and price came all the way down here and went up all the way up to here. Okay, so and the little wicks you can see, it simply shows how much the price went up or went down. So the body shows the opening and closing, and the wick shows how low it came and how high it went up. Okay, so exactly in the red candle you can see it's the opposite. The price opens up here and closes down here in the body. That's why it's red, closing above and opening above and closing below. And in this case green candle, opening below and closing up, that's why it's green. And in the red candle, it's opening above and closing below, that's why it's red. Okay, and this wick simply shows how much the price went up and price went down. So this was the basic candlesticks pattern. Okay, so this was the basic concept of candlesticks, how you can read candlesticks. Okay, let's move on to the next slide. So there are many types of candlesticks pattern you can learn on YouTube or maybe any ebook or anywhere. But we will majorly focus on three candles, both from the bullish and the bearish, which are more accurate and which you should look for to avoid the noise, all the noise in the market. We will focus on only three bullish candle and three bearish candle. So let's move on to the charts and look for this three bullish candles. First, we will look for the bullish power candle. Okay. Second, we will look for the LPR plus power candle. Thirdly, we will look for the LPR candle. Okay. So let me take you the chart and show you. So here on the screen, you can see three candlesticks, which I've told you. The bullish candlesticks, we will look for three bullish and three bearish. Okay. So let me explain to you how it works. So for the bullish candle, first you will look for a power candle. Okay. So basically what a power candle is, it's a big, huge candle with only body which I will show you in the live charts. This huge candle with only body and little to no wicks. So it simply shows the power of the buyers, that buyers are more active in the market and prices going up. Okay. Second, you will look for LPR plus power candle. So as you can see, firstly, let me explain to you what is LPR. So basically, LPR is lower price rejection, lower price, lower price rejection. So meaning of LPR is lower price rejection. Lower price rejection means it is rejecting from the lower part of the body, lower part of the candlestick. Okay. So in the LPR plus power candle, you will see a huge wick on the bottom and a big body on the top. Okay. So it is made up of both power candle and LPR candle. You can see it here. It is an LPR candle. It has small body but a huge wick. So it shows the power of buyers, that buyers are more active because price went all the way up to here. The sellers wanted to go down, but the buyers were active and they took the price all the way up back to here and closed above the entry price, opening price. So that's why it is called lower price rejection candle. So in between, if you combine the first and the third candle, it becomes a LPR plus power candle, in which you can see both the body and the wick is also big. So first let's see power candle example. Let's go to on the chart and let me show you. So as you can see here, this candle, you can see it is a power candle because it has zero to no little wicks, and as compared to the all the previous candles, you can see it has majorly a large body, which shows the power of buyers, and from there price went all the way up. Okay, so this was the power candle. Secondly, what we have LPR plus power candle. So let's us look for a LPR plus power candle. So here you can see example of power plus LPR candle. Here you can see it exactly. So it has huge body and a huge wick downside. So it shows the power of the buyers. The price wanted to come down, the sellers wanted to take it down, but the buyers were more active and the price went all the way up and closed above the opening price. And for the third example, we have LPR candle, lower price rejection, which has a small body as you can see here, and it has huge wick. Okay, so it has huge wick as you can see here. So this is the example of LPR candle. I'm sure, I hope I made it clear. Here also you can see an example of LPR plus power candle, and this is the example of LPR candle. This huge wick to the bottom and the small body on the top. Okay, so it's a 15-minute time frame. You can clearly see the price went all the way up from here, 13 pips, 14 pips. Okay, so it shows the power of the buyers. Okay, so next we will learn about bearish candlesticks. Bearish candlesticks pattern also we will look for bearish power candle, HPR plus power candle, and HPR candle. Okay, so same concept, different name, and just the candlestick color will be red. Okay, and in the end I'll also tell you why the candlestick's color also doesn't matter. So let's us begin. Let's us go on to the charts and see how bearish candlesticks looks, how these candlesticks we can see on the charts. So for the bearish candlesticks pattern, we will look for these three types of candlesticks. First, you can see a bearish power candle. It is a huge candle like in the green candle you have seen. So it will be a huge candle with no to little wicks, and second we have HPR with power candle, HPR plus power candle. Thirdly we have HPR candle. So like LPR, HPR means higher price rejection. So HPR means higher price rejection, and you've combined the first candle and third candles, this candles becomes the power plus HPR candle. So let me show you a live example of it. As you can see exactly here, you can see a power candle. This candle you can call it a power candle because it is bigger than all other candles and it has smaller wicks. For example of HPR candle, you can see this candle. It has a huge wick on the top and small body on the bottom. And for the power plus HPR candle, let me show you an example. If I find one, yeah, so here as you can see, you can see a big body of the candle and also a big wick which shows the power of the sellers. Okay, so these were the candlestick pattern you will look for confirming your entries. Okay, so let's move on to our next topic. Now we will start with importance of trend lines and support and resistance levels. So let me clarify one thing. Be it trend line or support resistance, all indicate one thing only, that is key level. Okay, so be it support or be it resistance, that doesn't matter. All it shows that it is a important level where buyers or sellers are more active. As you can read here, every support zone can turn into resistance for price. What I'm trying to make you understand is that there's no support or resistance. They are just an important key level from where people are more interested in buying or selling. Okay, so as you can see in the diagram below, first price was getting rejected from this area. Okay, so price went up and came down again, rejected from here, here, and here. But when it broke above, the price started taking support from the same level. So the resistance can level can also become support level, or the support level can also become a resistance level. Okay, so it is not a support level or resistance level. Just make it clear, it is a key level where buyers or sellers are more interested in buying or selling. Okay, so this was support and resistance level. I'll show you in the live charts later on. Determining the potential entry and exit points. Our entry must be either at a key level or according to the current situation, and our exit must be before a key level. Okay, so in this diagram below, you can see the price was written here. It is the same diagram as previous. Okay, so where we should plant our entry or exits. Okay, so we will always plan our entry near our key level. Okay, so if we plan our entries near our key level, and we will exit our positions before a key level. Okay, so this will be our game plan. So in this case, you can see price rejected from here, this level. So our exit will be before that level and we will close our trade. So I'll show you in the live charts later, but for now I'm telling you how you can determine the entry and the exits. So there are two popular indicators we will use that are only required. Okay, so first is a moving average. A moving average is a widely used technical indicator that smooths out the price trend by filtering out the noise from the random short-term price fluctuations. So basically what a moving average is, the moving average is a line on the chart as you can see here. Here the dotted line you can see. A moving average is a indicator which shows what the average price of previous candlesticks were on that particular time. For example, the moving average are of different lengths. Okay, so if you go to the charts, let me show you to the charts. So if you go to the charts and plant a 9 EMA, okay, so now I came to the charts. As you can see here, this is the candlesticks, and the two lines below you can see these are the moving averages. So moving averages are of different lengths. Okay, so moving averages are of different lengths. As you can see on the chart here, it is a 50 and 200 moving average. Okay, so basically what a moving average is, suppose let's us take example for this candle. This red candle, you can see it is black in color. I have changed the color of the candle. So for this red candle, you can see the moving average is here. So this blue line is a 50 moving average. So basically what a 50 moving average is, on this time, on this candlesticks of, it takes the average of previous 50 candles. Okay, so whatever the average of 50 previous candles is, it is here. Okay, so this lines basically shows the every candlesticks and previous 50 candlesticks average. So like this it moves. So it is made out of the average prices of previous 50 candles. And the dark blue line you can see here, it is a 200 moving average, which shows the average price of the last 200 candlesticks, or the last 200 price. Okay, so for this example you can see a price here for this candlesticks. Currently the price is here, the moving average is here, so it is derived from the average price of previous 200 candles. Okay, I hope it's clear for you. If you have any doubts, make sure to ask in the comment section. I'll surely reply. And our next indicator is relative strength index, RSI. So the relative strength index is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 to 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. So let me take you the chart and show you what RSI indicator looks like. So now we are on the charts. Just you have to go in the trading view indicator tab and search RSI. The relative strength index will come up. Select it and something this like will show up. So I plotted the RSI indicator on the chart, as you can see here below. So basically what RSI shows is, what you have to simply follow is, if the price on the RSI, if the graph on the RSI goes below 30, the price is oversold. Oversold means according to the pair or according to the asset, the price should not be below that level. So it is considered as oversold, and potentially people will buy from there and price will go up from there. So as you can see here, the price came down of 30. So when again it went up, it took a bottom, and when it went up, price also went up. Okay, so if you see price coming down below of 30, you can start adding buy positions in that asset, and potentially it will go up. So it came into the oversold zone, now it will go up. For the overbought zone, as you can see here, the price went above 70 here, above 70 here, and the price eventually came down. Okay, so that's how you use RSI indicator. So it shows the overbought and oversold zone according to the asset. Okay, so our next topic is chart pattern. So basically what we will look for in the chart patterns is two types of patterns. First is double top or double bottom, basically the M pattern or the W pattern, and all the triangle patterns. Okay, so here you can see these are all the triangles patterns. I'll show you in the charts later on. Okay, So these are the chart patterns we will focus on. Next, move on to introduction of fundamental analysis. So fundamental analysis involves examining economic and financial and other qualitative factors that can affect an asset's value. Key economic indicators. So basically the major economic indicators are GDP, unemployment rate and inflation rate. According to these indicators, the price on the forex markets or the currency markets may show a huge move up or down. Okay. So next, our next module, risk management. Risk management plays an important role in preserving capital. Even skilled traders can experience losses. Making risk management is essential for sustainability. Keep in mind one thing, you can't be a profitable trader without a risk management. Okay. So you have to manage your risk anyhow in every trade. Defining stop loss and take profit orders is essential for beginners. You have to place your stop loss and take profit orders on every trade you take as a beginner. Determining appropriate levels based on technical and fundamental analysis is must for SL or TP orders. So, in order to place SL or TP, you need to determine an appropriate or key level. Okay, that we will know from the technical analysis and fundamental analysis. Okay, so position sizing. Next, position sizing refers to determining the amount of capital to invest in the particular trade. Trader may risk 1 to 3% of their capital per trade. For example, let's just take example. If a trader has $10,000 in capital and decides to risk 2% on trade, they would be willing to lose only $200 on that trade. Okay. So this is a bigger example. Let's, for example, take $100. Okay. For $100 account, you will only take risk per trade is 2%. That means you will only lose $2 to $3 on a single trade. Okay. And leverage. Leverage is the ability to control a large position with a relatively small amount of capital. Leverage amplifies both gains and losses. While it can magnify profits, it also increases the risk of significant losses. So basically, what leverage means is leverage is given by brokers. Okay. So if a brokers gives his clients 1 is to 200 leverage, for example, 1 is to 200 leverage is given by your broker. So what it basically means, by investing $1, you can buy worth up to $200 of a trade. Okay. So for example, if you want to buy $200 worth of apples, you just you have to just give $1 in exchange of $200 worth of apples. Okay. So our next module is developing a trading plan. A trading plan is a comprehensive document outlining a trader's approach to the market. The importance of trailing the plan is to know individual preferences and risk tolerance and goal. So basically what a trading plan is, you have to analyze what works for you and how much you can risk, what is your risk tolerance, and what you want to achieve. And the next is setting goals and other objectives. Setting a clear and achievable goal in trading. Differentiate between short term and long term goals. So basically, you have to set a achievable goal or achievable target. Okay, you can't assume to make $10,000 from $100 capital. You have to be logical and you have to set a clear goal in your mind which is logical. Okay, and you have to always look for long term goals. Don't look for short term. Trading is not a get rich quick scheme. So always focus on the bigger picture on the longer time frame. How you will become profitable in 1 year or 1.5 year or 2 years. Not that how you will earn in thousands in 1 or 2 months. that is not logical. Next is time frame selection and trading style. Significance of choosing a suitable time frame for trading. Explore different time frame trading styles. So basically, if you are a day trader, you have to use 5 minute or 15-minute time frame. For a swing trading, you have to use 1 hour or 4 hour time frame. For positional trading or holding, you can use weekly or daily time frame. Risk tolerance and money management. Risk tolerance and stress plays an important role in determining position sizes. So for risk tolerance, let's take an example. Suppose a person A works in a cafe and he earns around $400 to $500 weekly. Okay. So in order to lose more than that, for him it will be a stress. Okay. So make sure you lose a small chunk of your earning in a trade that will grow your account eventually. Okay. So importance of effective money management is an important in preserving capital. So if you don't do effective money management, it will blow your capital. If you are earning $10,000 a month, and if you are losing more than $5 or $6,000 per month, then you will lose your mindset and you will blow all your capital, and you will put money by taking loans, and you will basically revenge trade. So in order to fix that, you have to manage your money. You have to set a specific target and loss limit you will take. Setting risk per trade based on risk tolerance and overall account size. Trading psychology. Successful trading requires not just technical and fundamental skills, but also a disciplined mindset. So, if you want to become a trader, not only technical and fundamental analysis make you that. You have to have a discipline or risk management, and you have to follow a proper psychology. Common psychological challenges faced by traders are fear, greed, and overconfidence. For example, let's first take fear. If you are in a losing trade, you will increase more quantity in order to manage that risk. Okay, so you have to avoid that. I- If you enter a trade, place a SL and TP, leave it. Greed. Second, you have greed. So what is greed? For example, you are in a trade and you're near your TP level, and you see price is moving to that level fast. So you will increase your TP level, and you will hope for that the price will hit that TP level. Always remember, you have placed your TP level before entering the trade by seeing something. Okay. So you can't change that after in a trade. That will eventually take you to the losses. And the third is overconfidence. Suppose you are in a winning streak. You have won 8 out of 10 trades. Now you will trade more. You will trade more. If you lose 2 times, you will place a order 4 times more. That is that comes from overconfidence. Psychological challenges faced by traders is fear of missing out, FOMO. If you see there's a breakout or breakdown, you will enter a trade. You will think that I'll miss out on this trade, I'll miss out on this opportunity. Always remember, if you have preserved your capital, you can always take trades in the later future. But if you blow your capital, you cannot trade in the future. So always remember that. Loss aversion and fear of losses, impatience and desire of instant results. Always remember, as I told you, trading is a long term game. You have to look for 1 year and 2 year, not making money in 1 or 2 months. Overcoming psychological challenges, developing a trading plan and sticking to it, setting realistic expectations, using risk management techniques, and mitigate emotional responses to losses. So in the next part we will see some live trading examples. Now let me take you to my screen and show you some live examples on the previous topics what we have learned. As you can see, I've opened a USD JPY chart on a 15-minute time frame. First we will see a live example of supply and demand zones. Okay, so let me find a supply and demand zone first. So I've drawn a support level right here, as you can see on a USD JPY chart on a 1 hour time frame. What I'm trying to show you what is a supply or demand zone. Okay, so if let's first understand what is supply. Okay, so basically supply means when a price of product increases. Okay, so basically what supply means, when the supply of a product increases, its price drops. Okay, so it acts as a resistance for the price. Okay, so that is a supply zone or a resistance zone. And what is a support zone? As you can see right here, a support zone is a zone if, suppose for a product, if the demand of the product rises in the market, its price will also rise up. Okay, so as you can see here, the price has made contacts over here. As you can see on the chart, first price was taking support from here, second time it took support over here, third time it broke the support. Okay, so we call it a breakdown. Okay, so it's a breakdown. So the price broke and now price came back again to that level, to that supply level or that important key level which we called, this was a important key level, this red zone area. So price came to that level and took a resistance over there. It was a supply zone. So what happens if the price goes in the supply zone? The price falls. Okay, so as you can see here, the price took resistance from this zone and started falling. Okay, and again when price went up to this area again in the near future, as you can see, the price took resistance and started falling again from this area. Price has shown rejection, and now as you can see, price is quite above the level and it's trying to break, and most probably it will retrace a little bit. It will go like this up and again test this level and probably go up like this. Now this zone will act as a support area. What is a support area? So support area is like price will come to again this level and it can take support. It is a key level, so it will act as a demand zone and price will again go back up. Hope I am clear to you. Next, this was about the support and resistance. Now we will learn about what is a trend line. So basically a trend line is a line which can be drawn on a chart. Now let me show you what is a trend line and how to use it. Okay, so first you need to find any two touch points on the price. Okay, like this trend line can be drawn on a uptrend on or on a downtrend. Let's first understand what is a uptrend. So basically uptrend is a trend which is going upwards like this. Okay, so price is going upwards. It starts from here, somewhere here, it forms a high, it is known as higher high. This point is known as higher high, HH, and this lower part is called HL, higher low. Okay, so in an uptrend like this way price moves. So first price goes to a level, rejects, takes a support and again goes up. So it's a higher high, higher low, again higher high, it forms a higher high again and higher low again a higher high and a higher low. So in this way our uptrend goes. And for the downtrend, as you can see, the price goes down, takes a rejection, takes a resistance and comes down again, same pattern. So in a downtrend it is lower high and lower low. So this is called the lower high and it is called a lower low, LL. Okay, so in downtrend price moves like this, in a higher high, in a higher, in a lower high and a lower low. So this is a lower high and this is a lower low. Again this is a lower high and this is a lower low. So in a downtrend you will always draw the trend line above of the price. Okay, so in downtrend you will draw a trend line like this. Okay, and in the uptrend you will draw a trend line below the price on this area. Okay, so always remember this point. In an uptrend you will always draw a trend line below the price, and in a downtrend you will draw the trend line above of the price. Okay, so in this case, same support and resistance example, as you can see we have to find at least two touch points. Okay, so we have to find at least two touch points and we will extend it. Okay, so as you can see here, the price came here and second time it touched over here, so it has formed a base over here. So we will just extend it like this and wait for price to come to this area. Okay, so as you can see here, price took a support over here, second time over here, so it has confirmed that it can be formed a trend line. Now as you can see again here, we can see again a touch point. Now we have to take entries with the confirmation. Okay, so how to take confirmation? You need to find at least 2 to 3 confirmations in the way you are entering a trade. Okay, so as I've told you as a support example right here, that price will break up here, took a support and it will go up. Okay, so it can retest to this level also, to the trend line area. So what we will plan, that let the price come to our area, then we will take a trade. Okay, so let's extend this also. If this comes here, let us say price comes to this area and goes above. Okay, so now we'll wait for price to again come back to this area where this trend line is here and also a support zone is also here. So we have two confirmations. Now thirdly we will look for a moving average as a confirmation or a candlestick. Okay, so in the candlestick part I've shown you there are three type of candlesticks. So we will look for bullish candlesticks here on this area, and if you see, then we can we can take a long trade over here. So if we see a bullish candle over here somewhere like this, let me turn into green. If you see a green candle, may it be power candle, may it be LPR plus power, or may it be LPR candle. If we see such type of candle over here, we will plan a long trade over here. Okay, so our always SL will be below the support level and we will always target for 1:2. As you can see here in the tool over here, risk to reward is written. Risk to reward ratio is 1:2. Okay, or 2.03. So basically always risk is always, it is 1 and reward is, it is calculated like that. Always risk is 1 and reward is 2. Like here it is 2. If we take 1:3, here it turns to 3. So like this way only we will take 1:2 risk to reward ratio as a beginner. Okay, so like this we take confirmations on entry and exits. Now how much we will plan for our exit? Suppose we enter a trade over here and we have to take our target profit levels. Okay, so what we'll look for, the previous highs, or 1:2 is our one confirmation and the previous high will be our second confirmation. So as you can see, the previous high is right here, so we will always close our trade before this area. So somewhere like here it is 1:1.91, but we will close always below the previous high area. Okay, so it's a downtrend as you can see. So we will always close our, suppose we have entered here, so we will always close our position below the previous lower high. Okay, so like this way we will take confirmations and we will trade. Now let me place a moving average over here. So as you can see, the currently moving average is over here. Okay, so basically the light blue one is the 50 moving average and 200 moving average is here. So in near future, if you see, suppose, let me draw it, if you see a 50 moving average and 200 moving average at the same area over here like this, then all combined together, as you can see, it was a support area, key level, one confirmation. Second confirmation, that you have a trend line over here. Third confirmation, we have EMA over here. And the fourth confirmation was we see a bullish candlestick. Okay, so we can trade in a bullish direction upwards. So like this, you will always take confirmation before entering a trade or any trade. Okay, so I hope I have made everything clear, and like this you will take entry or exits. So I have already shown you how moving averages look. Now let me show you a RSI indicator, RSI, and as you can see here, the RSI indicator came here. Now as you can see, the price is currently above the 70 area in the RSI. So what can possibly happen? It can give a fake out over here. Price is currently above the key level. So what can happen? Now price has given a fake out. Now it can come back again to this level and take a retest and start going or falling down more. So this can also happen. So in this case, what we will look for? We will look for confirmations. Okay, so one confirmation will be a price has given a fake out over here. Okay, so it can possibly come down. So one confirmation we have got. Second, it took retest from the support or that key level. Third confirmation will be it has broken the trend line. So it will be a third confirmation. And maybe fourth confirmation you can take, that you see a bearish candle over here, like you see a bearish power candle over here, and you can trade in the downward direction by placing 1:2 risk reward. How you can do it? Because just go to this tool and place a short position over here. As you can see, I placed a short position over here, and you will always put a SL above the key area, key level, and you will target for 1:2. As you can see here you can see 1:2 achieved. Okay, in this way you can take a trade according to the RSI level. So I hope I have made all my points clear to you all in the live example. Okay, so like this way you can trade in real charts. So if you have any doubts, you can always drop it down in the comment section or message us on Instagram or WhatsApp. We will clear your doubts. Okay, so let's move on to our next topic. So our last topic is trading platform and tools. So broker, we personally use Exness. You will get the link in the description box. If you open an account with our link, we can help you out with any problem regarding the deposit and withdrawal. Trading platform we will use is MetaTrader 5 or MT5. It is available on Google Play Store or Apple App Store. All brokers provide their account link with MT5. Chart trading, we will use tradingview.com as I have shown you. Head out to the TradingView site, and this will help you in reading and analyzing the historic price and candlesticks. And for fundamental news, we will use the forexfactory.com. You can see all the upcoming news on this site and stay away from the market when the news is marked as red. So let me head over to the Forex Factory website and show you how it works. So just go to your browser and search for forexfactory.com. Something like this will appear. Now here, as you can see, impact is written over here. Impact, you have to see the red color marked. Okay, so as you can see, the currency pair will be written here, and according to your time zone, time will be written over here, that what time is the news. So you have to avoid trading while these red dots are here, the red news are here. So at 7 p.m. at my currently at my country at 7 p.m. we have CAD CPI news. So avoid trading at 7 p.m. to 7:30 p.m. and again at 8:30 we had GBP news on in red. So we will avoid trading during that time as a beginner. Okay, and we trade live also every day. So if you want to come to our live trade, make sure you can come to our live trade. Yeah, so this was it for this video. If you have any doubt, make sure you comment down in the comment box and we will try to solve it down. And make sure you subscribe the channel and like this video, and you can drop down your suggestions also on which topic we should make our next video on.